the whole system is as close to breaking as it's ever been. I've never even, that's why the market's reacting the way it is. That's why they can't step on it the way that they do anymore. And when they do, it comes right back up. Today is the options expiration day on COMEX. And it's interesting. These assholes put on a 440 million ounce short position at 37.50. And the price went up. They were getting hammered. Today's options expiration. Let's see what silver is right now. I bet it's under 37.50. So at 39 bucks, they were, and over 39 and change, they were down over $1 billion. Kind of funny how today's the options expiration day and they've whittled their way back. You watch what happens tomorrow to gold and silver. To go straight up.
Right now, the cracks in the system are bigger than ever. COMEX can't hold silver down anymore. Every attempt to suppress it snaps back harder. Options expiry just saw billions in losses for the short side, and silver is stair-stepping higher in plain sight. Andy Schectman calls this moment the opening of the three-digit silver path. And here's the shocking truth. Insiders are cashing out of stocks. Central banks are draining physical gold and silver. And the U.S. is openly flirting with dollar devaluation to deal with record debt. In today's video, we'll break down why silver is on the verge of its biggest breakout ever, why suppression has finally failed, and why this may be the most asymmetric investment opportunity in our lifetime.
And this continues, it's stair-stepping higher. They can't hold it down. They're trying their best to not get crushed. And I think the physical deliveries is what is changing the narrative completely. It's going to get crazy. You watch. I've been right about this. And silver is where gold was a year and a half ago. On a tech standpoint, I mean, it's right ready to bust. When gold got through 2,200, everyone said, "Oh, it's at its all-time high. Why should I buy it?" Well, it's gone up 50% since then. Silver's right there. It's right where gold was technically, and I would expect that to happen too. Stable coins will only work off the front end of the curve. Very short-term treasuries is what back the stable coins. So that's up to 2 years in duration. The bonds, those are notes. The bonds and bills. The notes, or the bonds, the longer ones, those will be backed by treasury gold, redeemable in gold, not the short end, which will be backed by the stable coins. If I had to guess, it finishes the year well above 40. And if you look at the resistance between here and 50, the cumulative amount of time it's spent at resistance points above here and 50 is less than a couple weeks. If that, I would expect that we see it blow right through those numbers once it gets through, and then it will act like gold did. And, look, Goldman Sachs and JP Morgan are both saying $4,000 gold this year, by the end of this year. Let's just assume that plays out. And the gold-silver ratio, if it went to 70, which is way higher than its average for the past 200 years, and it's coming out of the ground at 7-1. That's 10 times its geologic ratio, and it's average about 45-1 for the last 200 years, largely because gold's role is money and silver industrial. Even though for all of that time the mining ratio was 16-1, now it's 7-1 because it's depleting. We've talked about silver's form of epithermal, like this is epidermis, your skin. Epithermal is where silver is found, top of the surface. So of 850 million ounces mined last year, only about 200 million came from mining companies that mine silver. The rest came from byproduct mining companies that don't mine silver but stumble across it mining other material. So it's depleting in nature. With that being said, if Goldman Sachs and JP Morgan are right at 4,000, and assuming that the gold-silver rates will return just to 70, where it was there, 2021, and most of my career, 35 years, it's been way below that. Well, that puts silver at almost 60 bucks, which is what, almost a 50% gain. But let's put it at 50-1, which it's still above its 200-year average of 45-1. Well, that puts silver at what, 80 bucks? So when you talk about where silver should be and where it is and where gold is and the shortages on LBMA and the deliveries into COMEX and all this shit going on, to me, there is no better investment on the planet Earth than silver. And the only word that comes into my mind is asymmetrical. No downside, massive upside. You talk about owning foreign currency. Well, the upside is extraordinary. I don't know what the downside is. I guess it's what you put into it. Who knows? I don't know. But I do know one thing about silver, that it's disappearing and its needs are expanding, and it's been suppressed forever. And it's trading at ratios that are way, way out of whack. It's like 4 feet of snow in Death Valley in July. That's how much of an anomaly it is. Yeah, I mean, it's all the junk silver we were selling at spot last week. It's a little bit over that now, but I mean, the premiums are so low, it's insane. And I want you to think about this for a contrarian indicator. When I look back at my career, contrarian indicators, you should just jump all over them because that's how markets work. The insider's positioned way ahead of the rest of the world. So if we look since like the beginning of the year, insider selling is rampant. In fact, in June alone, just since June, Bezos has sold 5.7 billion worth of Amazon. The 3 or 4 biggest shareholders in Nvidia and board members have sold hundreds of billions worth since June. Since June, the industrials have been selling roughly 2 billion or more per week on average of securities. You got Buffett with 500 billion in cash. You got Jamie Dimon dumping shares. You got Zuckerberg dumping shares. The insiders continue to dump shares. Now, at the same time, the mom and pop retail, guess where they are? All-time record all in stocks, 54% above the 2008 crash. Okay. And the dot-com bubble. I mean, you're talking the highest above the dot-com bubble, the highest allocation ever. So on one hand, you got mom and pop retail, highest allocation ever, and the insiders running out the other door. You think Bezos has enough money where he doesn't give a crap, but he has to sell 6 billion worth of his shares since June? Hmm. Along with Jamie Dimon, along with the greatest value investor of all is sitting on 500 billion in cash. That's interesting. And on and on and on. And the industrials, which are the hedge funds and the smart traders who have teams of people analyzing and high-tech shit analyzing the markets, and well, they're all selling. But mom and pop, well, they're in all the way. Now let's switch it. In terms of physical metal, mom and pop has virtually nothing. And the premiums are as low as I've ever seen in my career. But at the same time, not just the most well-funded, but obviously the most well-informed. If you got that kind of money to stand for delivery on 100 billion worth of metal since November on the COMEX, when that never happened before, and the central banks who've been buying at levels that no one's ever seen before, they are the most well-informed people on the planet. Information precedes wealth, right? These people know where the money's going. That's like Wayne Gretzky. How'd you get so good? I didn't skate to where the puck is. I skated to where it was going. Well, what do you think these people are doing? The insiders are moving away because they know where the puck is going. And they're loading up on gold and repatriating it. 40 central banks have brought it home from the Bank of England, the New York Fed, to remove what? Counterparty risk. They know what's coming. And so when you talk about low premiums and buying metal, and the insiders are draining the world's exchanges and dumping treasuries, and the public's moving and dumping stocks massively, including the owners of these huge corporations who don't need to make more cash, but they're selling their stock. 6 billion worth? How much does Bezos have in terms of cash? Why does he need 6 billion sold of his stock if he thinks it's going to the moon? My point to you is that this is why insiders position before anyone even thinks of it. And they goose it the other way, so everyone's record allocation. What could possibly go wrong? When you talk about metal right now, there's never, ever, ever, ever been a better value. And I want you asked me, how can you go on? Let's look at the other way, right? Two things. We talk about Trump wanting a weak dollar. He just came out and said he likes, I like a strong dollar, but you make a hell of a lot more money. What did I do there? You make a hell of a lot more money with the weaker one. So when we have a strong dollar, one thing happens. It all sounds good, but you don't do any tourism. You can't sell tractors. You can't sell trucks. You can't sell anything. Manufacturers would be the first to benefit from a falling dollar. Japan and China fought for weaker currencies for decades and were able to dominate markets over years. Now, it doesn't sound good, but you make a hell of a lot more money with the weaker dollar. It's coming. But I want you to think of something else. When we talk about benefits of or pitfalls of staying in the US dollar over time versus going on a gold standard, like you said, if we go back to in 2008 with gold at $870, The average price of a house then was $320,000. So it's a little better than I thought, but
Yeah.
320 divided by 870 is 320,000 divided by 870. That's 367 ounces of gold would buy you a house in 2008. Okay, so 15 years ago, 17 years ago, if you had 368 ounces of gold, you could buy a house, the average house, right? So let's look at the difference between what the dollar's done and what gold's done just since 2008. That $320,000 is now will not buy you the average house. Now it's about 420 for the average house in the US. So just a little bit higher, right? So the value of the house went up a little bit, but those 367 ounces of gold right now are worth $1.23 million. It's going to buy you 4 houses or 3 houses. The point is that saving in dollars, you're going to go backwards. Saving in gold, you're going to go higher. Let's go look at 1970 when Nixon closed the gold window and set currency free. Gold was $35 an ounce. It's at $33.50 right now. It's lost 99.5% of its value against gold since 1970. And I often show the example of 1960, where gold was $35. A house, according to the Census Bureau, was $17,000. Do the math. $35 into 17,000 is 485. So instead of grandma and grandpa buying that house with the gold that your great grandparents left them, 485 ounces, they take out a mortgage and spend 17,000 bucks. And here we are, they put that 485 ounces of gold, which everyone says doesn't pay any interest. Why would you own something like that? But it has outperformed the S&P 500 for the last 25 years and doubled the 10-year treasury rate, even though it doesn't earn any interest.
The silver market is in uncharted waters. Just this month, 440 million ounces were shorted on COMEX around $37.50. Yet instead of falling, silver surged past $39, leaving over $1 billion in paper losses. That's a broken system in plain sight. Every attempt to cap silver now only triggers stronger rebounds. Technically, silver is right where gold was when it broke $2,200 and never looked back. At the time, people said, it's already too high. Yet gold went on to gain another 50%. Silver's chart is now flashing the same pattern. Once it clears resistance, history suggests it won't stop at $50. It could blast straight through. Even the big banks are hinting at what's next. Goldman Sachs and JP Morgan are projecting $4,000 gold this year. At a 50-to-1 gold-to-silver ratio, that means $80 silver. If the ratio moves closer to its mining reality of 7-to-1, we're talking triple digits. The supply picture makes this even more urgent. Out of 850 million ounces mined last year, only 200 million came from true silver mines. The rest was byproduct, production that's already shrinking. That means less supply at the very moment industrial and investment demand is exploding. Meanwhile, the smart money is sending signals. Jeff Bezos has sold billions in Amazon stock. Nvidia insiders are cashing out. Warren Buffett is sitting on $500 billion in cash. Jamie Dimon is selling too. Hedge funds are exiting in size. Yet retail investors? They're more all-in on stocks than before the dot-com crash or 2008. And central banks? They're doing the opposite, buying gold at record levels, standing for physical delivery, repatriating reserves from New York and London. Over 40 central banks have already pulled assets home to cut counterparty risk. Why? Because they know the U.S. must devalue the dollar to deal with $37 trillion in debt. Even Donald Trump admitted a weaker dollar makes you more money. That's code for deliberate devaluation. History proves what happens when you hold metals versus dollars. In 2008, 367 ounces of gold bought the average U.S. home. Today, those ounces are worth $1.2 million, enough for 3 houses. In 1960, 485 ounces equaled the price of a home. Today, that same gold is worth $1.6 million. Meanwhile, the dollar has lost 99% of its value against gold since 1970. And this is where it gets critical. Andy explains why silver's setup today is unlike anything before. Stay with me until the end, because what he says about silver's role in protecting wealth, especially as the dollar weakens, is something every investor needs to hear. This isn't about chasing spikes. It's about holding real wealth while the system unravels. Gold and silver have preserved purchasing power for 5,000 years. Suppression may have slowed silver down, but it never stopped it. And now, with the three-digit path wide open, the real move could finally begin.
It's been under your mattress earning nothing but dust for the last 65 years. That 485 ounces of gold today, well, what's that worth? That's worth $1.625 million, almost just over 1.6 million. That's $17,000 that you bought your house with. Okay, your house is now, even though it was built way back then in 1960, it's worth 350, 400,000. Here again, you can go back as far as you want. You can look at a $20 gold piece in 1933 that was an ounce of gold. It bought a finely tailored man's suit, the $20 coin, hat, shoes, jacket, sport coat, everything. Well, that 20 bucks doesn't even buy you the tie. Might even buy a couple pairs of shoelaces. And now that 1 ounce of gold, 3,300, still buys you everything it did in 1933. My point is that gold will retain and enhance your purchasing power and your lifestyle, where saving in dollars right now, if you do, you got the president saying a weaker dollar is how you make a lot more money. You see they're going to devalue the dollar to pay off the debt. You can see all of this stuff. Everyone is dumping dollars in treasuries and buying commodities. I mean, how much more do you need to see before you believe it? And the numbers show it. So how do you put yourself on a gold standard? You just start buying it, and you hold gold and silver as wealth, not to get wealthy. It is wealth. That was mentioned cumulatively, gold and silver, about 700 or 800 times in the Bible. And for the last 5,000 years has been wealth. And here we are, it doesn't always repeat, but it rhymes. The most well-informed traders on the planet, the central banks, and whoever the hell is standing for delivery in all this gold and silver here, they know the information, and they're backing their entire plan. You can see it with gold and silver.
So here's where we stand. Insiders are selling paper assets, central banks are hoarding physical metal, COMEX suppression is breaking, and the dollar is being openly lined up for devaluation. Silver isn't just undervalued, it's on the edge of a historic repricing. The question is, will you be on the right side of history when it happens? If you've made it this far, here are some questions for you. Drop your thoughts in the comments below. Do you believe silver will finally break $50 and enter the three-digit zone this cycle? If gold hits $4,000, where do you see silver landing? $60, $80, or beyond $100? Do you think insiders selling stocks while central banks hoard metals is the clearest warning sign yet? And here's the big one. Do you trust the dollar to hold value, or is silver the true safe haven? Your answers help shape this channel, and I'll be reading them. Don't forget to hit like, share this video, and subscribe for more deep dives into the truth behind today's financial system. The bottom line is simple. Silver isn't just another trade, it's wealth itself, and the window to act before the world wakes up may be closing fast.